If you're planning on purchasing your first home in the next 12 months, you need to watch this.
So today we're doing a first home buyer masterclass, everything from deposits, loan options, costs associated, researching the market, the process from exchange to settlement, and going through engaging property managers if you go down the investment route.
Start being serious with your offers and start listening a little bit as to where the feedback is.
If you're not pre-approval, real estate agents won't take you serious. First home buyers, 61% of first home buyers don't proceed with the purchase because they're looking at the for sale price and they've got unrealistic expectations.
Firstly is to make sure you're not full of shit with your income.
Yeah.
So they'll want to see your pay slip and then see that the corresponding amount actually gets deposited into your bank account. There's no income cap, so you can be earning $500,000 a year and still go on this.
Yeah.
And you just need 5%.
Yeah.
I'd be surprised if you watched this and you weren't at least a few steps further as far as purchasing your first home goes.
Absolutely.
We've got a lot to get through, so it is going to be short, punchy sort of topics. Yeah. First one I'm going to talk about is how much deposit. So that's always the starting point when you buy your first home. Yeah. Is getting a deposit together. So there is some schemes out there which you can purchase with between 2% and 5% deposit. 2% is if you're a family, single parent, that sort of thing.
Yeah.
Then you can purchase with a 2%. And the others is for all others, which is 5%, which is for basic first home buyers or anyone that hasn't owned a home in more than 10 years. So that's an important one as well. Yeah. So we'll get straight into it. The home guarantee scheme, there's some major updates from the 1st of October 2025. There's unlimited spaces now for that scheme. Yeah. Used to be capped at between 35 and 50,000 per annum. Unlimited now. There's no income cap, so you can be earning $500,000 a year and still go on this.
Yeah.
And you just need 5%.
Yeah.
So 5% isn't much. Other big change is that they've increased the price caps for the properties. Big changes for Sydney and regional capitals such as Newcastle.
Yeah.
You can now purchase up to 1.5 million.
Yeah.
Which is massive. Melbourne is 950, Brisbane Gold Coast $1 million, Perth 850, Adelaide 900, ACT $1 million, and all other regional areas sort of fall between that sort of 500 and 800. Yeah. So some really good schemes out there. Most people would be eligible now.
Yeah.
So you've got no excuse as far as I'm concerned.
And if you're an investor going down the first home buyer route and you're not eligible for these schemes, you're obviously going to then be paying for lender's mortgage insurance, and that lender's mortgage insurance will change depending on the deposit amount.
100%.
So, keep that in mind, but purely for first home buyers living in the property,
yeah,
you'll be eligible for these schemes more than likely.
Yeah. And if you're not eligible, you can still use parents as a guarantor. So essentially you're borrowing the deposit against your parents' house.
Yeah.
So let's say you're buying at $500K, you need a 20% deposit, it's $100,000. That $100,000 is actually secured against your parents' home, but it's in your name still.
Yeah. And any information on that, you need to speak to Brad about the risks associated with it, but it's really simple and a common thing that first home buyers use. So
we've helped thousands of people buy their first home. Yeah, simple as that. So if you want to find out eligibility for any of these, click on the link in the bios and you can book in a free call.
Difference between deposit amounts, 5, 10 and 20%.
Obviously, the more you're leveraged, the more borrowing capacity you're going to need.
Yeah.
The more cash deposit you put in, the lower the loan amount.
Yeah.
So there is a bit of a playoff there.
Yeah.
And you need to, which we'll talk a little bit more about, but you need to sort of pick a price or a repayment that you can make each week and work backwards from there.
Yeah.
Don't just go on to buy at 800 if you don't know what that means as far as a weekly repayment is.
The best thing to do is speak to a broker first to know what you're eligible to borrow as a maximum capacity.
Yep.
But then know what the servicing repayments are going to be, because if you can go and spend $1 million and you're not comfortable servicing that much debt, you're not going to go and spend $1 million.
Doesn't mean you need it.
So work out what the weekly or monthly repayments are going to be. And like you said, then start to search based on what those repayments are going to be at that price point. So
the other thing with the deposit as well, it needs to be what's called genuine savings. So 5% genuine savings means that mum and dad can't just give you the 5% and then the next day you do it. It has to sit in your account for 3 months. Yeah. So either you've saved that for 3 months or you were given it and it's sat in an account for 3 months. Either way, that becomes genuine at that point.
Yeah. So costs that you need to be aware of?
So stamp duty depends on states. Some states have got full concessional stamp duty exemptions. Yeah. Some don't. So you need to really research how much stamp duty you're going to pay. Lender's mortgage insurance if you're not eligible for any of these. Solicitor and conveyancers, they can range anywhere from like $1,000 to $3,000, $3,500.
Yeah.
My advice with that is you pay for quality.
Exactly.
So if you want shit to be remembered and done on time and done properly, you have to pay quality.
And there's complexities with there as well. Some vendors try and put special conditions in there that they release access to the deposit so they can go and purchase. You're probably going to want a solicitor on your side for protection if that's the case.
A good solicitor, a good conveyancer. If you're getting charged for something and going to court, would you get the cheapest lawyer? Exactly. This is the same thing. Pest and building inspections, always get your own, in my opinion. Real estate agents will offer you theirs for $500-600 or whatever it is.
Get an independent report.
Yeah.
Moving setup, maintenance costs, all of the just miscellaneous.
You can no longer, one thing to remember, you can no longer go back to your landlord and say, my heater or my water system's screwed. Can you fix it? That's you. You now fix it.
Make sure that all the inclusions on the front page of the contract are there, because otherwise,
that'll
be additional.
I have seen ovens swapped out on settlement day. Fixtures on the wall. So there was a built-in entertainment unit that's actually bolted to the wall that was removed. A lot of things that you need to, when you're first doing your inspections, list them. Check them again before.
Pre-settlement inspections we'll get to.
So now we move on to what a bank actually looks for. Now, bank statements is something that a lot of lenders will ask for. Couple of reasons they look for that or want to look at your bank statements. Firstly is to make sure you're not full of shit with your income. So they'll want to see your pay slip and then see that the corresponding amount actually gets deposited into your bank account. So they've got then two forms of income verification. The other one is actually they want to obviously see genuine savings, and the other one is they want to see how much you're spending. Some lenders do. And some lenders.
I did hear recently that someone had $12,000 for the month expenses on 64 different OnlyFans accounts.
Yes, I saw that on LinkedIn as well. And it was all run through the business account.
So they're looking.
That, in that case, if you had $13,000 or $12,000 worth of OnlyFans subscriptions, it would go into what's called entertainment on your living expenses and dramatically reduce your borrowing capacity. So there's a lot that they look at. My biggest advice is about 3 to 6 months before you want to apply, start cleaning that stuff up.
And you can do your credit score online yourself.
And you don't need to quit everything. I don't say you don't do Afterpay, don't do gambling. Just be responsible. Don't go and spend $1,000 a week and go, but they don't look at the amount I wear, which I hear all the time. Because yes, they don't. They look at the amount you're spending. Income from gambling isn't income as far as the bank's concerned. Credit file and credit score basics. An average, the minimum that most lenders will take is around 600 to 650 credit score. If you're below that, they're going to look a lot harder.
Which is, that's pretty low.
Like 600 is,
probably should be up around over 800 at least.
700, 800 is a good amount. So some things that really affect that is too many inquiries. So applying for car loans, finance, anything all the time. That frequency will affect your credit score quite a lot. So the types of inquiries as well. If you've seen those Nimble and the Wallet Wizard, they're called Payday lenders. If you use them, your credit score's ruined. With a lot of
lender, you're in difficulty.
Even if you didn't, like some people, I didn't actually need it, I just wanted it now. You've ruined your credit score. Wait 6 months or so before you apply.
So for all the first home buyers or people out there who ask me, should I go and get multiple pre-approvals with different no's? Don't do that.
No, that's frequent credit inquiries. They don't like that. So another thing that can affect it is late payments. So pay your shit on time. Don't delay it or go, I'll pay that next week. I can get 2 warnings before they do this or that. As soon as it goes 7 days, I think, past the due date, it's reported through to your credit file as a late payment.
And this is just, we're not, do whatever you want with your life. But if you do want to get pre-approval, just get this in place at least 6 months out.
100%. Start doing your stuff now. Don't whinge when you cut to an early hours decline. It's because of all the things. Start doing the stuff now. So next one is
the dots. Your pre-approval. We're out in the market researching. So we've opened up Domain. We've opened up realestate.com, and we're starting to look at properties. The first piece of advice is to just look at sold properties in the area, because we've spoken about it plenty of times before. First home buyers, 61% of first home buyers don't proceed with the purchase because they're looking at the for sale price and they've got unrealistic expectations.
And then the problem there is, let's say it's the price guide is 650. The agent quite often knows it's going to go for 750. But then the first home buyer doesn't want to offer anything more than 650 because that's the price. The price is 650.
You've been,
why would I pay more? Yeah. It's like going into JB Hi-Fi and seeing a price tag for $1,000 for a stereo and they actually want 1,200.
Yeah, exactly.
You're not going to offer them 1,200. You're going to get the shits and leave.
Yeah.
And that's what's happening.
Yeah.
So people need to realize that the price guide is a sales tool.
Yeah.
It's not actually what it's worth.
Yeah. And go a step further than just looking at the sold price. Search the address for the property that you're looking at, and you might see some sold history there. You might see the street profile. Domain has a really good profile of streets. So if you search, if it's say, 40 Kemp Street in the Junction, just type in Kemp Street and you'll get all of the sales in Kemp Street, and you'll be able to see what the sales results are like for that particular street. And you get other data on that domain profile as well, with owner occupiers in that street, how many investors are in the street, what the profile is in terms of age demographics in that local area, the school catchments that you're looking at in that location. So use those tools out there for that early stage research, and know realistically what the sales prices are and not the for sale. Next, obviously, you're going to the open home and auctions. And that's more so just to gauge the interest in the market at the time, because you can go out there and look at all this data online, but the best way to look at and analyze any market is to see what the buyer interest is at the open for inspections and auctions. For first home buyers, I do recommend them at least just attend an auction to get familiar with the process. So you're not turning up and you just a mess on the day, because it is a pretty intense experience if you haven't done it before.
Auctions are pretty intense.
Yeah. And even when you do it, it's a completely unknown experience. So
Yeah, it can cause a lot of overpaying and also underpaying as well, because of the nerves, and people just go, oh well, I bow out because I'm sick of the competition. It can be a good thing and a bad thing.
Yeah.
But do your research before.
And there's different auction strategies as well, bidding strategies, but we're not going to go into this, but do some research on some bidding and negotiation strategies as well. It'll help you out.
The deciding your strategy is really important, especially from a loan point of view. So are you going to live in it forever? Is it your forever home? Are you go move out? The reason I say that is because of the difference between a redraw and an offset account. Now, to be clear, if you want to pay off your home loan as quick as you want, throwing it into redraw or throwing it into offset account will work exactly the same.
Go back and watch our previous.
Yeah, sorry, I've got it on there.
Yeah.
But that is exactly the same. But where it actually starts to make major change or major effects is if you want to move out. So let's say you had an investment prop or a first home, and you paid 50 grand into your redraw account, and then you wanted debt off. You paid your debt down, and then in 3 years' time, you want to move out and turn that into an investment property. It'll take that money out. It's no longer tax deductible. Yeah. If it's in an offset account, it is.
And that's the thing that we didn't touch on in the finance component or the pre-approval component, depending on your strategy, whether you're living in it, or you're rent vesting or whatever the strategy is to purchase. There's going to be different features associated with the loan. Is it interest only? Is it principal? How many years is it going to be based over? All of these different loan options that are attached to that loan. So
they're all, like, in my opinion, those sort of things are a given when you go through a mortgage process. Yeah. So you don't really need to discuss that in full detail, because we know that that's going to be discussed as part of that process. Fixed, variable, all those things. That's your baseline requirements. Yeah. And then your bigger picture stuff is how long are you going to live there? What are your goals? Are you going to pull equity out and buy an investment property in a couple of years? So then we can start to structure the finance to suit your goals, not just let's get the cheapest. Yeah. I know that certain banks do really good internal valuations. So if your goals are to buy again in 12 months or 2 years' time, I'm going to go with that lender who's going to potentially give us 50 grand more in 12 months. Yeah. So there's a lot to it.
Absolutely. Next, we're moving on to due diligence. Obviously, the first place to start for your due diligence is watch the Talk Property to Me podcast.
Yeah.
With all it is, so you've done your research.
But you get the pre-approval.
First and foremost is a pre-approval.
It's like your blank check. Yeah. You need that to go out there and confidently put offers in and do that.
And just for pre-approval on your due diligence, it's just an indication of what you can borrow. It's not guaranteed that loan is going to be approved. There's obviously requirements around that. Some lenders, you've mentioned it before on the podcast, a lot of lenders don't like Wickham because it's such a saturated unit market.
Yeah. So I don't like apartments in that area. Yeah.
Yeah. So pre-approval is just an indication on what you can borrow. It's not formally approved until you sign.
The only thing missing is the security.
Exactly.
So that's the next part, but that's a good place to be, especially if you're going to auction.
Yeah.
And we've got postcode tools as well. So we know, all right, you're looking at an apartment in Wickham. I'll use the postcode tool for each lender to see who lends what in that.
Yeah. And that's the thing, like before these first home buyer guarantee schemes came out, there were banks offering, I think it was medicos or high income professionals who spend between $2 and $8 million. They could borrow up to 95% of the purchase price without paying lenders mortgage insurance because they had the income to service the debt. So, there's
Going that many unemployed doctors. That's
exactly.
so the other things, inspections, make sure you do plenty of them,
Yeah, if you can get to at least 2 inspections.
Yeah, I reckon.
Because
You're going to see things differently as well.
absolutely, when you get there, you're taking everything in, especially if you're in competitive markets and there's 10, 20 people at the open home. You're probably going to miss some stuff if you don't know what you're looking for.
And the other thing as well, your expectations change. So the house that I bought in Merriweather, I actually looked at twice. So the first time I went through, I was like, oh, I don't really like it.
Yeah.
And I ended up buying it after the second inspection. So because I'd gone and done 20 other inspections and realized
You've set your realistic expectations.
I realized that everything is actually overpriced and I'm going to have to just pay for what I want. Yeah, it's as simple as that. Yeah, so
Next is obviously building Pest and Strata. Yeah, Brad said get an independent pest and building report.
check your flood.
Sometimes the vendors might provide their own, but get your independent. Strata is probably for another episode. I can break down how to properly review a Strata report.
I've seen some nightmare stories with that. Yeah, so that's definitely.
If you've got a buyer's agent, make sure they're reviewing the Strata report for you. If not, get your conveyancer to review it for you as well. And we'll do another episode on how to properly analyze a Strata report. But other checks are flood zones, bushfire risks, insurance, sulfate soils, any of those risk factors that are going to affect your insurance premiums.
There's a whole band around the Lismore area,
Well,
we can't do for and not get insurance.
So we did an episode recently on the Central Coast market. Tumbiumbi is a market in the Central Coast. I was doing insurance checks for clients of mine. Bateau Bay, we were looking to purchase. In some areas of Bateau Bay are in floodplain area, and a lot of the insurance premiums are coming back at around $2,500, $3,000 for a standard 3-bedroom property. $1 million. We looked at a property in Tumbiumbi. It was in a bushfire zone, only 3 kilometers away from Bateau Bay. The insurance premiums come back to $13,000.
Yeah,
so it makes a massive difference.
Think about that as that's what $1,100 or so. A month.
Yeah,
that's also.
Make sure you're checking those things. And in terms of free tools for you to be able to check those things, just type in New South Wales Spatial View or Planning Portal, and you've got free overlays. That's just for New South Wales. If you search those things in any other state, there's free tools online that you can do them. If you want to use paid tools, you can just use tools like Archistar, and they've got all of the floodplains, all of the risk overlays on there.
So contracts, make sure that's going to a qualified conveyancer, not your uncle that did it 3 decades ago.
Yeah.
Get someone that's relevant and has been doing it for a long time. Yeah. Doing it well.
Yeah.
Get them to look over before you sign anything. Yeah. Conditional and unconditional contracts. Most first home buyers are always going to enter a conditional contract because of, if the price is tight and all that sort of thing. But if you are in a position to go unconditional, sometimes you can get a real good deal.
Sometimes, especially in Sydney, you basically can't buy a property unless you go unconditional.
Yeah.
And all of this due diligence, contract review, and requesting your amendments that you require, making sure that you pest and build, strata report, all of your checks that you need to do before making that offer. Make sure they're all done, because the time you sign that contract, you're legally bound.
As soon as you make that offer, what I would usually do is order a valuation straight away.
Yeah.
Because by the time you make that offer, doesn't mean you're signing that day.
Yeah.
Goes to the conveyancers. It'll take us 3 days, sometimes even 5 days before they all get it all together.
Yeah.
In that time, I've done the valuation, I've ticked off the conditions, and I'm waiting on form.
Yeah.
So then your unconditional offer isn't really unconditional.
You basically got everything approved.
There's no risk.
So just touching on that before, If you do sign a conditional contract, you typically have a 5-day standard cooling off period, unless you sign a 66W certificate, which waives you a 5-day cooling off period. If you do go into that unconditional period, whether it's after your conditional exchange, or if you waive your 66W upfront and go unconditional from the day that you pay the offer, or the day that you've got the offer accepted in exchange, you're not legally bound to that contract until you sign. It's not, a lot of first home buyers think that once their offer is accepted, they're legally bound.
Yeah.
You need to sign the contract and exchange on the contract with the vendor's signed contract. But if it's once you've gone unconditional, you are legally obligated to fulfill that contract. If you do exchange conditionally with the 5-day cooling off period, you can rescind the contract at your 4.25% in New South Wales. It'll be different for other states. So check state specifics with exchanging contracts.
So next point is, we've got all these things, we've done our due diligence, you're now going to make an offer. What's the best way to do that?
Yeah, so we just touched on exchanging the contracts, but obviously there's the process in making the offer and going through that negotiation process. It's going to vary depending on where you are. I purchased a house in Dubbo recently. I think it was a 2-week process just because real estate agents are a little bit slow, and it depends on the agent that you're dealing with as well. So there can be some agents use a software where you submit your offer and it's really easy sort of workflow. You can go through there and just select what your offer amount is, the deposits and terms around it. But again, all agents are different. You can send them text message, some prefer an email, but it's typically based around price and terms. A lot of people think that a sale is purely based on price. It's not. There's a lot of terms involved, being the settlement period, the exchange, whether it's conditional or unconditional, pre-approved, whether you've got pre-approval. If you're not pre-approval, real estate agents won't take you serious.
Well, and that's fair enough in a lot of cases. They don't want to waste their time having to go back to the vendor all the time and then go, oh, sorry, they didn't have any approval in place. Doesn't look good for anyone.
And before making an offer, people hate dealing with real estate agents, but real estate agents take you more seriously if you're active in the market and you're taking their phone calls as well.
Yeah.
Because it is common that first home buyers are in the market for 6 months before they purchase. So if you go to an open home in the first week, a real estate agent can see you coming a mile away.
Yeah.
And they're going to be like, oh,
These
BBs, they're not serious.
Yeah.
We'll keep nurturing these guys for the next 3 to 6 months. So put your offer in on an email and use terms in your favor. Try and find out what the vendor's motivations are selling. Are they upgrading? Are they downsizing? Do they need, some people want to sell their investment properties to not pay land tax anymore, or they want to get it within a certain financial year for their capital gains. Other vendors might want to release deposits to go and purchase another property. Some people might want to do a really quick settlement and a lease-back period so they can go and use their money to purchase. There's so many requirements around.
And the closer that you match their needs, the better price you're going to get. It's as simple as that.
100%.
So, and the biggest thing that I see, and we mentioned the stat earlier, is 61% of first home buyers miss out on properties. Biggest reason I see is because they're lowballing.
Yeah.
They come into these places. Now, look, I guess it is a bit to do with the price guide, but if you see a place at 650, you're not buying it for 550. I can tell you that. You're not even buying it for 640.
No.
Start being serious with your offers and start listening a little bit as to where the feedback is.
And the less conditions attached to it, the better you're going to be, because I know for a lot of people it's an emotional experience. It's a big decision to make and everything happens really quickly. But put yourself in the vendor's position as well. If they're going to purchase another property, they're selling and buying at the same time.
Yep.
So they're doing a lot more than you. If you're putting your offer forward and it's subject to pest and building inspections, subject to this, subject to that, is subject to a finance clause, the more conditions that you have, the less confidence the vendor has with your purchase coming through.
100%.
So if there's an unconditional contract on the table at a lower figure and you've got all of these conditions attached, they'll go, well,
we're going to miss out on our other property.
What are the chances if we accept the higher offer, the conditions aren't matched, we then lose our other buyer, and we have to go back to market and chase another buyer.
Like I've been in that position before,
Yeah.
and you need to go with what's the safer option in a lot of the cases.
Absolutely.
So once you do get to a point and offer's been accepted, negotiation was successful, you exchange contracts. That's either with a cooling off period or not, depending if it's unconditional or conditional. So if you are going to be renting a place out, obviously you need to engage a property manager straight away.
Yep. So obviously, the selling agent's always going to be inclined to try and take on the management for the rental property. If you don't want to go with or they don't provide property management services, or you want potentially different options, in the offer and exchange process before you exchange on the contract, try and request access to the marketing material so that you can advertise the property for lease prior to settlement. Otherwise, you're going to settle on the property. Property manager's going to have to come in, organize photos, and you're just not making money on the property during that period. So, if you can advertise the property prior to settlement, you're going to minimize your vacancy period post settlement.
Yeah, and if you're moving in yourself, obviously organise your insurance, your utilities, all those things you
Yeah.
need to do. So we'll punch into some common mistakes
Yeah.
that I see a lot of. So first one is people buying emotionally, financially, falling in love and overpaying.
Yeah.
It's as simple as that.
And on that as well, buying emotionally, not financially, emotionally for the vendor as well, because the thing is with any negotiation, nobody wants to feel like they're being taken advantage of.
Yeah.
So it's same as with the price anchoring. The reason first home buyers aren't paying market value for property is because they feel like they're paying more than what the property's worth because it's not the guy price.
Yeah.
Same as with the vendor. If their expectations were too high, they're not going to sell the property. So a deal happens when both parties feel like you know they're not being taken advantage of, and they've got basically what they want.
Yeah. So the other one is overstretching yourself. So yes, your borrowing capacity is this, doesn't mean you need to borrow that.
Yeah.
Figure out what you need. Skipping inspections, so missing the pre-settlement inspection or something like that.
Well, it's like we said, try and do those 2 inspections. If you can't, 1 inspection's fine, especially if you've got a buyer's agent, you can just have them look after it for you, but definitely skipping inspections. Um, Not factoring interest rate changes. That's, and that's a big thing that we spoke about with.
I saw it a lot during COVID. People were getting into the market 2%. Now we're at 6%, 6.5 at one point.
Yeah.
That ruined a lot of people.
Yeah.
So you got to factor that in. Another couple of points is it's your first home, not your last home. Don't be going for your dream home straight away.
Yeah.
Buy something that you can afford today.
Yeah.
Don't wait 2 years until you can afford your
Yeah.
dream home. Buy something today. Leverage that in a couple of years. Either sell it or use your equity to buy that dream home in the future.
Realistically, your first home is the stepping stone to get to that dream home.
Yeah.
So everyone wants more than what they can afford.
Yeah.
But the reality is just get into the market and let it get to where you want to be in the future.
Another couple of quick points is start establishing your team now. Figure out who you're going to work with as far as a broker goes, a conveyancer, and start the process.
Yeah.
You don't have to reach out when you think you're ready. Reach out a little bit before it. I know we will quite often have meetings with people that want to buy in 6 months' time.
Yeah.
We build a plan out with them and then they implement the plan and come back to us when they're ready.
Absolutely.
It's as simple as that.
Yeah. Other things are just unexpected hidden costs that you might not be aware of. What are the council rates? What are the strata levies? Obviously, is there any special levies if you're doing that strata review? What are the maintenance costs associated with
Keep
it?
a bit of a buffer.
Keep a buffer for
Don't
everything.
use all of your savings
No.
to buy your first home.
Yeah.
Keep 5, 10, whatever you can keep.
Yeah.
Keep it just in case.
Especially because you're not familiar, it's the first time in the market. Just get familiar with the process and all of the learnings. So, I think that's basically it for tips. I think there's other ones in terms of resources. I can quickly touch on a few resources. If people want free tools to go and do research on biodemographics or what an economic profile looks like for a particular area, sometimes CoreLogic has free information. SQM Research has limited information, but you've got all of the state government resources with their planning portals, with the infrastructure portals, so I can see what's in the pipeline for current infrastructure projects, and then later REM plan and informed decisions are good for economic profiles and see what the biodemographics are. population research, dwelling completion rates, all of that stuff. There's free tools out there that people can use if they want to do a detailed analysis. But I think what we've touched on,
If anyone wants us to dive deeper into any of the ones we've talked about today, any of the topics, throw it in the comments. We'll do a deep dive into something. It might be
Very
making
specific.
offers or the finance side.
Yeah.
Today was just a bit of a masterclass overall. You follow that process and you'll do well.
Yeah.
That's it for
questions
today.
we get asked all the time.
Throw a comment in if you want us to dive into a
Absolutely.
little more detail there.
See you on the next one.